Good afternoon, everybody. Welcome to the Wholesale Investor Emergence 2021 panel on Agri-Food Innovation. My name is Michael Macolino. I'm an Associate Director at BDO here in Australia, where I head up the AgTech innovation side of the business. With me today, I have my fellow panelists from Israel. We have Ethy Levy. We have David David Smith from Ceres Tag. We have Neale from DataFarming, and we also have Ralph, who I believe is over in Singapore. So to kick off, what I'm going to do is just hand over to each of the panelists and ask them to briefly introduce themselves, and then we'll get into a bit of a conversation about investment in food and ag tech. So Ethy, I might hand over to you to kick us off.
Sure, thank you. So nice to see everyone and great to be on this panel. So I'm Ethy Levy, based in Israel, lived for several years in Australia. I'm the co-founder of the Bridge Hub, which is an innovation hub for agri and food technologies based in Wagga Wagga, and also the fund manager of Kinneret Impact Ventures. It's a new fund, Israeli fund investing in early stage startups in agri-food, water, and sustainability.
Thanks for that. And David, I might hand over to you next.
Sure. My name's David Smith. I'm the CEO and co-founder of Ceres Tag. We started the company about 5 years ago. We're the world's first direct-to-satellite monitoring organisation for livestock. We also have extended into companion animals as well. We go live with our platform at Beef Week in Rockhampton in May, after 5 years of collaboration with CSIRO and Meat Livestock Australia.
Excellent. I'm looking forward to hearing more about that. And then Tim, over to you.
Yeah, thanks for the opportunity. Tim Neale, DataFarming. Our business is really created out of a frustration of poor technology adoption in agriculture. And we're trying to set about breaking down the barriers to adoption to improve uptake and value. And I think one of the other key parts that we're interested in is bridging the sort of locked farm gate, as I like to call it. The digital farm gate is sort of locked. And I think we need to really focus on getting data flowing from within the farm through into the supply chain. I think that's one of the key areas we're working on in the future.
Excellent. Thanks, Tim. And finally, over to you, Ralph, for a bit of an intro.
Yeah, hi, good afternoon. I'm happy to be on this panel. My name is Ralph Graichen. I'm a Senior Director at A*STAR, Agency for Science, Technology and Research here in Singapore. And we are developing research programs for the whole ecosystem here in Singapore. We have also a number of research institutes in the organization, and food and nutrition is part of what I'm responsible to look after.
Excellent. Thank you, everybody. So to set the context for today's panel discussion, I think it's really important that we understand where agri-food tech is. And I think the audience would really appreciate to get a bit of perspective from each of you. We've got a diverse panel today of research and ecosystem builders and a couple of AgTech founders as well. So I'm really keen to get an understanding of where everyone sees agri-food tech innovation over the next 5 years to help investors that are on the line to see where they may sit in terms of their investment thesis. So I'm happy to sort of keep this fairly conversational, but I might throw over to you to start off with, Tim.
Yeah, I think we sort of thought that the peak of AgTech excitement was reaching a peak last year, but luckily we were wrong, because there's just been an incredible interest in AgTech, and DataFarming has only been around 3 years, even though we've been in business for 20. There's the absolute hype and acceleration in investment has been incredible, and I think what we're going to see going forward, though, is a consolidation in a big way. And we sort of knew this was going to come, but I think now the time's right now in terms of merging multiple businesses together, because everyone sort of swims in their own lane a bit, and that's good because we can't all do everything. But we collectively, we are a much stronger force, especially in Australia, given the small number of farmers that we actually have in Australia. And then, like, we've got about 40,000 grain growers in Australia at the moment, and there's probably equal. David will be able to tell you how many livestock producers. I think it's about the same amount. But you know, if you go to India, for example, there's like 130 or 40 million farmers. So you know, really, from an Australian AgTech point of view, the world is their oyster, but we've got to get it right on home soil. So I see that combined, we have some super duper AgTech businesses in this country that need better patient capital. There's two, you know, ag's a long, slow burn, right? It's a long fuse, big bang, as they say. So we need slow capital to keep us, building that market. Like David said, it's been going for 5 years. You know, that's the patient capital we're talking about. And then the world's the opportunity, because Australian farmers are the toughest in the world. So if we get it right here, it'll pretty much go anywhere.
Excellent. And Ralph, really keen to get your perspectives. I know that you're more focused on more upstream in terms of the food innovation side of things. Where are you seeing the bulk of the innovation interest and investment from the food perspective?
Yeah, it is quite interesting. I mean, I have to say maybe a little bit of background of Singapore. So we don't really have a primary industry. I mean, less than 1% of our land mass is still used for agriculture. And that gives us a different perspective when we look at innovation. And I have to say there are areas of high interest on consumer trust. I mean, we are looking, there's a lot of innovation nowadays in food. But the communication of the innovation to the consumers, I think, is a bit lacking. On the other hand, Tim just talked about Australia, India, and the other places. So if we look at Singapore, if we look at India, if you look at all the agriculture, what is actually common is a lot of data, how immense the data penetration is in agriculture now. Everything is based on data. If I go into an indoor farm, if I go to a small plot-hold farmer in India, or if I go to the large farms that are in Australia, data is getting very, very central. And that is quite interesting. And like I said, the innovation, there is a lot of innovation, and unfortunately, it is not very well communicated to the consumer. And the more we innovate in food, I think that is something we really have to catch up to be able to communicate that properly. That whole area really needs to be. There needs to be a balance between the innovation we are doing and the food we are selling.
Excellent. And Ethy, your role spans over Israel and also Australia. What are you seeing as the key trends? Many in the AgTech innovation ecosystem in Australia look up to what's been done in Israel and really see Israel as a leader. What are the key differences that you're seeing in the Israeli ecosystem and the differences back into Australia?
Sure. So Israel has been a very active ecosystem in AgTech since before the establishment of the state, and we see now a huge increase of numbers of entrepreneurs that are entering this space. We have about 1,000 startups, both in agri and food technologies. And an interesting trend that we see in Israel is many second-time and third-time entrepreneurs that had successful companies in fintech or cyber technology or other area of technology are now shifting into AgTech. So we are seeing very interesting solutions that are coming from very different angles. And you mentioned data, but really all those areas of technologies that are used in fintech and cyber and other spaces are now being brought into the AgTech sector. And it's very exciting and very interesting. And I think that this shift will happen in other places as well. I think that people at a certain stage, they come to a stage in their life where they want to create an impact and not just make financial benefits. And AgTech is really the answer for that. They feel that, being connected to the land, helping the farmers, it's a good future for them, for their children. And I think it's a very, very positive trend, which I assume is happening also in Australia, but it will have an effect on the level and the quality of the technologies in this space. Being, a bridge between Australia and Israel, we see lots of Israeli companies, and this is really connected to what Tim mentioned. We see lots of Israeli companies that want to validate their technology in a big market, an important market, an advanced market like Australia. And this is what we do with BridgeUp. We help Israeli technologies come to Australia to validate their technology. We see also lots of interest from the ecosystem here to partner with technologies from Australia, and David can talk about that as well. But there is this trend of consolidation, as Tim mentioned. The entrepreneurs understand that there's a limit to the number of technology that the farmer can be exposed to. The farmer, yes, he wants to improve, he wants to be more efficient, but he wants a one-stop solution. He doesn't want to deal with 10 suppliers of technology. And I think that the same as we've seen a consolidation with the big chemical companies, we will see that also with the technology providers. We will see more and more partnership between different providers of technology solution, because really at the end of the day, if it's not easy to use for the farmer, is not going to adopt those technologies. And this is really, I think, the key to this lock that was mentioned before. So this is what we really see here in the ecosystem. And in terms of investments in the space, I think that one big difference between Israel and Australia, it's the risk-taking. In Israel, you will see lots of investment in the early stages of the ventures, and in Australia, it's a bit more challenging. Usually, investor will want to see some kind of market, some kind of traction, and you can't expect to have all the companies with traction. You have to support the companies at the earlier stage, which is, that's the stage where they need the money and when they need the investment and the trust. And as you mentioned, it's a long term. Okay, it's AgTech is not like cyber, and it's not like other IT. It's a long term investment. It's a bit like biotech or pharma. It's long cycles, and we need this patient money. But it's critical to have those investments at the early stages.
Thanks for that. So definitely a couple of key themes that are starting to come through in terms of the need for integration, the need for patient capital, and also the emergence of this consolidation in the technologies, which is an interesting trend that I've been picking up as well. I think we saw that yesterday with Fluorosat merging with the company to basically become a consolidated entity. So I think that we're going to start to see more of that, which is an interesting trend. I'm going to throw it over to David just to round out this sort of 5-year trend discussion. I know that you've been deeply involved in the industry for many, many years and have done a lot of research and analysis into where it's going. Keen to hear your thoughts in terms of what we should be looking out for over the next 5 years.
Yeah, look, the industry is going to be changing dramatically, and people are going to be looking for transformational technologies in what they do that can take us on that journey from where we are to where we need to go. And having that, if you've got a transformational technology, it then you become a little bit, you won't be disrupted as much. And certainly in the technology that we looked at, no one had ever been to do satellite-enabled communication before in animal monitoring. And really, it's a transformational technology. I mean, in 10 years' time, there'll be lots more doing it that way. But you also have to be an open platform. One of the things that we wanted to do is enable data to be shared along other value propositions. And we didn't do something that's just good for the animal while it's on the farm, but also along the complete supply chain. And, you know, Ethy sort of alluded to, there's an organisation that Ethy's associated with that would use that data to, you know, further enhance the value proposition of activities either on farm or in the supply chain. And so I think that's important to look at those things. I want to go back to long-term investments. Absolutely, patient capital. I love that statement. I mean, we've been going for quite a while, and people go, yeah, what's so special that your technology? It's actually not about the technology per se. Yes, it's got to be good. Yes, it's got to be great. But, you know, you've got to put it on animals. You've got to test it. That takes years. You know, you've got to go through the animal ethics part of it for us anyway. You know, there's a whole lot of the component of this that people are not understanding about the tech, and that's why you need the patient capital, because there's only a few that's actually going to survive through all of that process, because it takes so long to get even accreditation. You know, we will be the world's first smart tag to be accredited. To get accreditation will take you 3 years of endurance, of survival, of making it. But at that time, you then become a standard opportunity. You know, on you could potentially be used on all animals, all livestock for us in our particular situation. So these are the multifaceted areas in which needs to be considered when investors are looking at this. We've certainly been through all of that phase, and now we're about to launch, go live. So we've done all the hard work, and we're very excited. And I'm sure Tim could say some things equivalent in the cropping side as well.
Yeah, great. I'm going to actually throw over to Tim and then probably come back to you as well, David. I'm keen with both of the AgTech founders that we've got on the call today to drill into a little bit further into what your experience has actually been raising capital for each of your companies. Who were, I suppose, what was the process like? Who were the types of investors that you spoke with? How long?
We lost Michael.
Thought it was me.
Did it take? What were some of the challenges? I know that led to things like. Can you hear me?
You're breaking up a bit there, mate.
You came back.
No worries. All good. So apologies for that. So yeah,
sort of got the gist.
I'll throw over to Tim. But yeah, really keen to understand what the process of raising capital for your company has been. And what the challenges were, and really what that experience has been like.
When we got started, we were certainly, the VC market really hadn't, I guess, matured as much as it had in other countries like Israel or in the US. So we looked for partner organisations to fund us in seed stage, which was very successful, and then we're just completing our third round now, and we think that we need partners that have multiple benefits, and some of those are sort of VCs with benefits, so industry linkages, or actual partners, commercial sort of level partners for investment, so that they actually see this as part of their offering going forward. And they might not have the skills or the drive to really get these changes quickly. So we see that we've been very successful with commercial businesses partnering with us from a funding point of view, and we've also been very fortunate to have Artesian VC with the Graichen Innovate Fund provide us with funding from as part of the industry funding. So that model of VCs and industry is really good. We're now talking to quite a few of the family office type investors. So they're now starting to come on board. So I talked to a group only a week ago that had never, ever invested in AgTech. There are whole groups of investors now switching on to the world of AgTech and food tech. So I think there's been predictions about the enormous growth in this area in investment, and I see it already happening. by almost every group I'm talking to now has never been an AgTech before, whereas 3 years ago, it was the hard and fast, commercial level investment in Australia anyway. Very different to the US. Some of the challenges, I guess, is it takes a little bit of time to get things across the line, especially last year with all the complications. So it wasn't so much about the lack of willingness to invest; it was just the physical problems of getting investments through in 2020. So I see this year is going to rapidly get a lot more excitement. What really worries me, and it worries a lot of existing people in the industry, is that the excitement of it all there's going to be a lot of companies, getting funded on excitement and not on nuts and bolts, good solid technology. So that can potentially ruin it for others in the industry. But I guess what are we going to do to stop that? There's nothing we can do. So I'm hoping, and I'm seeing this maturity, Michael, where investors are digging quite deep now. They're not just taking things on face value. So I think that's a really good step forward, because there's too much of this. It looks cool. It's going to save, going to feed, all the people in the world, and it's going to save the planet. Let's just fund it. And I think that's gone. Thankfully, it's now they're digging much deeper into saying, show me the business model, show me the process, how we're going to achieve this, not just on face value. So I think that maturity is coming, and that's really good for everyone in the industry.
Excellent. Yeah, no, you raised some really good points there. I think the maturity side of it, I see it expand year on year, particularly around business models. And I think that the business models have become much more sophisticated. And, that's something I'm really actually keen to get a little bit more insight from David in terms of what his experience has been, but also from a business model perspective, what are your thoughts in terms of how that's evolved over the past few years that you've been developing your business?
So we're not the traditional way to go about. We do have family offices. We do have high net wealth individuals as shareholders. But before I talk about shareholding, I want to make sure that this is out there, and for any future entrepreneurs. The Australian government, and for us, the Queensland government, have been amazing support. So the R&D rebates and other things when you spend money, and then assistance to get you into markets is first class. On the shareholder side, it's really tough in Australia, as Tim indicated, and on that matter, I wish that we were Israeli in a bit, because they really get behind the shareholding side of things as well. So we're a bit unique in the fact that we do have, at the moment, we've got 31 shareholders, and they're amazing support. They've taken the time to get to know the platform, the people, everything, and we're selling in 8 countries now. So we're about to go boom, literally. But we've got no VCs in our organisations as well, and partly is we didn't want to accept the terms that the VCs often require. So we've got only ordinary shares. We've got no debt, and we've got a solid amount of cash to propel us into the market. And with that, we, I think, but it's taken a lot of work. We've had to say no to a whole lot of people before we said yes. And then to become a shareholder, it is a very simple process for us. We just really got it down to a neat little package that just goes out, and people can either agree after they do their due diligence, and away we go. And I'm happy to say the shareholders have done pretty well.
That's really interesting, David, that you've been able to bring on all of that investment without involvement in VC. To maybe dig a little bit deeper, how have you been going about that in terms of different funding rounds? So have you had individual funding rounds like a traditional venture round, or are you sort of courting investors as they sort of start to approach you for investment?
Look, amongst the AgTech guys, you never stop raising money, right? You just all the way to market. After you're in market, you make that, and you get cash flow and stuff. It changes. And that will certainly be the case for us. I mean, we actually have a round open at the moment. It closes on 31st of March. But it's been challenging, to say the least, and we've bootstrapped it. So we've raised a bit of money and we've got it to the next stage. Then we've raised a bit more. And to be honest, it takes a hell of a lot of time and a lot of effort. And, but if you do it that way, from a founder's point of view, you don't dilute yourself as much either. And believe it or not, more and more investors want to see when the founders actually still have a good chunk of the company, because that drives them. If you don't have that and you dilute them too quickly, then, the enthusiasm can wane, because you just don't have that. And fortunately for the founders of Ceres Tag, we still have a majority shareholding, and that's certainly going to sit us well going into market. But, we don't have any preference shares, for instance, so we don't have to go and negotiate. Our plan is to get into market, go hard, globally expand, and then list by probably 2023 is our ultimate goal. And with that, we'll use those funds to then propel it even more, get deeper into markets, broaden the approach. Like I said, we've got a companion animal product that we're in co-development with CSIRO again. So that's a whole new market again. Our ultimate goal there is to be, one of the most comprehensive animal monitoring companies in the world in a pure play.
Excellent. Some great insights there. Thanks, David. And Ralph, from an international perspective, I know we've got from both Tim and David a good understanding of the Australian process and the Australian landscape. What are you seeing from an investment perspective in Singaporean AgTech and food tech companies?
Yeah, so we actually had a surprising inflow over the last few years in that area. Like I mentioned earlier, we have not really a primary industry, not a lot of space to do agriculture, but there was over the last 2 to 3 years a big inflow of venture capital, but also startup companies that came in. And so we as a research organization work with both. We're trying to anchor the startups here. We're trying also to anchor the capital here to invest in these. And we see then the issues that go beyond innovation. What is needed for scaling up? How do I get my products to the market and be able to test them? So, which then means what is the regulatory environment I need to provide and work on? So that is quite interesting to see, and also the how wide the innovation can be, from individual products that are sold to consumers to rather technologies that are enabling energy savings in indoor farms or monitoring of livestock in larger farms. So it is interesting to see that evolving here. It is also, really a big push was the regulatory adjustments and approvals we had recently in terms of cultured meat, in terms of novel food products that launched here, and see how startups can benefit from that. So again, testing market, but more upstream, and bringing the products out to the consumer.
And you touched on cellular agriculture and alternative proteins briefly there. I know that Singapore was recently the first country to regulate a cell-based meat product. What are your thoughts on the venture capital interest in alternative proteins and cellular agriculture? It seems to be all the interest over the past 6 months from a food innovation perspective seems to be on that sector. So very keen to get your perspectives on that.
Yeah,
as Tim says, I think that's probably one of those areas, as Tim has mentioned previously, that there's a lot of hype around. So really keen to get your perspectives.
Yes, it's an interesting area. It evolved over the years. It was always very expensive. What we often challenge when we engage companies then is, for whom do you actually innovate? Tim mentioned earlier, I want to save the planet. I want to make everything a better world. But that doesn't help you if you have a single single product and want to bring that to the consumer. So here again is, for whom do I make that product? Who's my target audience? And these startups often then struggle at the scale up. So it works in the lab. It works small scale, even from a financial point of view. But if I move from 200 liters to 200 cubic meters, then I might, in terms of scale up, I might get into problems. So yes, the interest is very high. And again, the interest is now very high for a lot of these startup companies because of the regulatory approval process and the clear approach in how do I bring my product to the market. So in the last few months, the engagement with companies has increased significantly just because of that single event. And we are trying to help and engage these companies to help them clear that gap. So there is a gap for these companies in a lot of countries where there is outright opposition to cellular meat products, but also what still needs to be done, coming earlier to what I said, is how to communicate this to the consumers. In Singapore, again, culturally, we have a lot of mock meat here already, which is plant-based, soy-based, that people generally consume. So these plant-based products are not so much a difficulty to convince consumers to accept. Cellular meat now is, again, yes, I have solved the technical issues, I have solved the cost issues. How can I communicate now any benefits to the consumer? How can I communicate not only benefits, I want to save the planet and sustainability, but I think the benefits on health and general consumption needs to be communicated. And then what is the perception of the innovation that went in it? So it is, again, that consumers shy away from being too much interested. They don't want to hear the technology that is in their food products. And this is even more so in cellular agriculture, because there's a lot of technology in it, a lot that the average consumer doesn't understand. So I think it's not just the problem of getting everything scaled up, solving the technical issues. It is then also how to convince the consumer to change their behavior. Food is a very emotional product when it's consumed. And I think this is often forgotten if I approach it purely from a technical and innovation point of view.
Yeah, there's it's interesting, and I think that gap between the technical and the technology and the application and the story around the application of that technology is an area that agri-food innovation seems to struggle with very, very, at a macro level. A lot of the founders that I meet are very, research-based or technical, and they do struggle to make that leap from, being the person that has spent years and years developing the technology to being the person that can communicate the application of that technology and scale the business. And that's probably one of the biggest pieces of feedback and biggest pieces of concern that I have when I speak to investors is they see that this person is the right person to develop the technology, but they question whether this person and this team are the right people to scale the business. So that's definitely, from my perspective, something that this sector needs to probably address as it starts to grow. Ethy, you probably would see a lot of that. I'd be keen to get your thoughts on how we, translate research and translate those core technologies into scalable companies.
Yeah, so definitely in Israel, we've had, TTOs, so the Technology Transfer Organization, very active along the year. And I think that one of the key element for the success of the startup that were based on those technologies was that usually they would bring a CEO, professional CEO, to lead the company. And then you don't have this problem of communicating the technology, because it's true that in many cases it's one of the issues with startups that have a complex technology. I just want to go back 1 second to the alternative meats and alternative protein, which is a very, very hot topic with lots of hype around it. We see it in Israel as well, with a large number of companies from cellular-based to 3D printing to alternative protein-based meat. And it's very exciting. But I think that's one of an additional thing that I see actually mainly in Australia is also meat, which is produced in carbon neutral farming, which is also a very interesting alternative, and we see that more and more. And Australia is really leading in that space. I don't know. It's an area that is now really a big hype, but longer term, I think that again we will see some consolidation in that space because many of those companies are very similar in what they do, and I see already some discussion between some of those companies. But I think that the alternative, the protein space in general, is very very exciting, and not enough solution in that space. We see some new technologies in extraction of proteins, but still there's a big potential in that space, and that leads to nutrition, which we haven't touched too much upon. But nutrition is becoming more and more part of what the consumer is looking for. I think that especially with COVID-19, there was more awareness to health and nutrition. And the consumer will want to know more what they're eating, what it is made of, the provenance and the traceability as well. So these are areas that we see now lots of solution in that space. And again, looking at COVID-19 and some of the effect that it has had on the space, also the supply chain. Supply chain has to be more efficient. We have to solve some of the issues that we've seen in the past year in that space. And I think that we will see more and more companies in those areas. Another topic that is related as well is the carbon offsetting, which is also a trend that we see here in Israel growing, and in Australia, obviously. And this is going to be extremely relevant to the agri-food sector. So I think that as investor, we need to learn this topic properly and really understand what it means, because there's lots of hype, but we need to really get down to the understanding what it really means and how it's done, and which claims is really has some substance behind it.
Yeah, I mean, I'll just follow on from that. If I can, there's a really nice, well-rounded push coming, like way beyond carbon. With natural capital and sustainability, we're getting such strong indicators of that now. And carbon's been bubbling on for a while, and but now we're getting this nice, well-rounded request, and you see all of the major food companies now asking for 50% reductions in their carbon footprints by in 9 years' time. A lot of them have got 2030 targets. So, and from those companies that I talk to, that the biggest problem is coming from the agricultural component of that they can't, they're trying to get all their other bits and, green power and all those kind of things in their processing. But the biggest risk or threat or opportunity, if you want, and look at it another way, is at the farm level. So, but the problem we're finding is that, like I said at the start, the digital farm gate is locked a bit, and we've got to enable growers to open up that digital data flow beyond the farm gate, because at the moment, when it lands in a processing facility, it's very well tracked. But before that, there's still a lot of work to do there. But the opportunity now, there's actually a delivery point in Australia now that you can't deliver anything but sustainable canola. So there is no other option if you want to deliver your canola into this delivery port. So we're seeing this turn from boutique to mainstream big time. So this stuff's been ticking along for a while, but all of a sudden, bang, there's this huge push now. And it's like everyone woke up on the 1st of the 1st this year and went, right, we're into this, it's getting serious. So I think it's a really, really good sign for agriculture, and it's really exciting to be part of that.
It's
David, I was going to say, if you want to, you've been nodding. I'm sure you've got plenty to add to many of Ethy and Tim's points.
No, here to all has been said is just adding to that is traceability provenance too. Traceability provenance is
it has to be tracked.
And biosecurity controls. Not just at the farm. Yes, absolutely. And then along that complete supply chain, that that's the reason why we went to satellite. So you know where they are, how many there are, what they're doing at all times. Doesn't matter where they are in that complete supply chain. It's just so important for the future of the industry. I mean, I'll talk about animals for a moment. I foresee that within the next decade that you're talking about, Tim, that you won't be able to buy, sell, or transfer an animal unless you've got a set of data with it to go to give you that confidence. We see other platforms like Auctions Plus and other great ways to buy and sell animals. You put an animal on there now, but in the future, unless you've got the data packet to go with it, you won't be able to sell or transfer the animal. So really that's what we've set ourselves up for, not just what it'll do today, but what's coming.
Can I throw something in there? The problem that farmers have with that, is that they're not getting paid extra for it. The canola they are at the moment. They're getting an extra $5 to $10 a tonne, right? But I heard the other day that Coca-Cola, and I probably shouldn't mention names, but they basically said, we want to buy your sugar, but it has to be sustainable. But we're not going to give you any more money for it. I don't know if that's true. That's a rumor I heard. But, we need to give value back to the growers too. If they're going to collect data, pay for it, and it's note that it's an important part of the product that you're supplying.
Yeah.
Well, the data question is one that I'm keen to get everyone's perspective on. We are collecting huge volumes of data through all of these sensors and different pieces of software. And I think that particularly as we start to decentralize this data and perhaps even tokenize, certain aspects of data, how we can, on one side, from an investor perspective, what is the value of that data and how do we monetize that data? But also, how do we enable the value capture of actually collecting that data by the farmer? How do we enable them to benefit of that? Are there any thoughts in terms of different data monetization strategies from anyone?
I don't mind kicking off if that's
Go for it.
Yeah, sure. Look, the data that's collected on the animal can be used multiple times. It's not just for what the animal is doing, but there are other parties along the supply chain like finance and insurance that need this sort of data to be able to securitize the loans or premiums in which they have. And, there are governments that need to know this information for their own biosecurity controls, et cetera, et cetera. So there's a whole monetization opportunity there using the same data multiple times, not just once, just for while it's on the farm. And I think there's some learning to be done for all of the stakeholders along the supply chain to learn how to do it. Like the processes to know all the history of the animal and put it into a product, like a marketable product. Like this is grass-fed from the southwest regions of New South Wales, and give it a brand. Branding has got a long way to play in this because too much of it's just consumer type product. And it's got to go to, as Tim said, creating more value. Getting paid for what you're producing is critical. And you only do that really with branding.
Yeah. I think that the other use of data obviously is prediction. So many predictive technologies need these huge amounts of data to be able to build their algorithm. And the other side of it is the artificial intelligence. So even if we don't monetize right now, this data will be useful for the next startups that will be looking at providing solutions and artificial intelligence application for the sector. So it's definitely an important resource that will be used.
Ralph, have you got any thoughts in terms of the data debate and how we better leverage the data that we're collecting?
Yeah. Sorry, I think my network is slowing down. But quite often the question I need to ask startups coming to us regarding data management is the ownership of data. How will the data be managed? Who will own the data? Who has access to the data? This is often not very high on the list of considerations for many startups I talked earlier to. But yes, so the value of the data itself, all the work that needs to be done in terms of machine learning and AI, there might be, like what David said earlier, far more in it that might not be relevant only to one point in the supply chain, but the overall supply chain. So again, the distribution of data and providing access to other parties is a very important consideration, and we need to look here how that will be managed. Again, coming back to the ownership.
Excellent. So, want to maybe just switch gears as we start to get towards the end of our discussion today. Really talking about the way that we build agri-food tech startups and companies. Get your thoughts on the ecosystem and the infrastructure that we have, and how we build better investment grade companies for the future. I know through discussions with each of you in the past, we've each got some strong opinions on what can happen. But I think that a rising tide lifts all ships. So really keen to get an understanding of how do we build better ag tech companies. And Tim, I'll kick off with you.
Yeah. Thanks for throwing me in the deep end there, mate. I second what David said about government support. It's been really helpful for us to get going, and the R&D tax is also a very good vehicle in this country. And I certainly be interested in Ethy's opinions about the Israeli experience, because they seem to have done it 100% right. So I think we need more of that. I think we need less government competition too. I often find that state departments and other national departments are setting up similar programs with government money and competing with us. I think that needs to go. I also think that there needs to be better cooperation between the university sector as well. It seems too that there seems to be too much competition in that space. We need to work together more, and I think there's a huge opportunity there, because there's a lot of R&D that hasn't seen the light of day that could be easily implemented in a lot of startups, like what we're doing with GRDC, the Grains Research Development Corporation, where we take some of the research and development and implement it straight away. So it works as a nice two-way street, instead of them trying to build, software platforms, for example. So government trying to build software platforms, that's just crazy. So we need to do more of that collaboration piece, I think, and foster those young businesses coming through, because it is a long, slow burn in agriculture. I do agree with some of the comments before too about getting the right people in the room. I see other startups with no business experience going and raising huge amounts of capital, and you think, crikey, guys, have you actually even done a cash flow? Do you understand about simple accounting metrics? And they got all the great ideas, but you need that as a whole business. As you know, Michael, you know more than any of us that to run a successful business, there's a lot of other things you need to be considerate of. I was actually talking to a satellite company yesterday, who the smartest guys in the world, right? They're really smart young fellas, but they've raised money and they've got all these grand plans, but even the most basic stuff they hadn't even thought of. So I think that needs fostering. And there's plenty of great people with business experience that we could match together to actually make sure they're ticking off the business stuff as well. So I think you need a well-rounded team, and not too heavy on the tech, but on the running a whole business. And I guess me being in business for a while has been incredibly helpful to manage that cash flow and those kinds of things. So I think that whole overall government support's good, and we need to put in the right spots, but not be in a competition space, and then providing business support to young founders is very important. Thank you.
Yeah, I agree with Tim. I think that in Israel, what we've done right at the beginning when we started with the whole venture capital and startup ecosystem was the incubator program, which was exactly about that, was about giving some funding for founders, but also providing them the whole set of skills that they needed for growing the company. And that this has been extremely successful, and the model has been duplicated in many other geographies. But the issue with this model is that the incubator would take too much, of the shares of the startup, and then for the next round, the founders would be left with very few shares. So I think that in Israel we see a shift a bit from that type of model. But still, the government in Israel has a policy that their support for innovation is for the stage that is very risky. So, and I think that was always my issue with the Australian government when we were doing bilateral agreement. And I'm not a diplomat anymore, so I can say anything I want now. But we always had trouble to find a joint project because Israel was looking for the riskiest one where private capital would not come in, and the Australian would look for the less risky project. So there wasn't any joint agreement. And I think that's the role of the government. The government needs to understand that we need it only when private capital will not come in. They're not supposed to compete with private capital. And I think that that's really critical for the early stages of the ventures. And it's true that, from my experience in Australia, there's too much competition between the states, too much repetition. And I think that's really collaboration. And, I've said it hundreds of times before, but collaboration is really the key to innovation. Collaboration within the government, but also collaboration between academia, investors, entrepreneurs, and industry. It's key to have this dialogue going on and understanding each one's needs and each one's advantages so that we don't need to compete or repeat or reinvent the wheel. So I think that's really the key for improving the situation today, and it's relevant in any country. Here too in Israel, there's a lot to improve in the innovation space, but we have an innovation authority which is independent, and they're very creative. They work with the startup community and with the venture capital community, and they always come with new models to be able to adapt to the needs of the market. So I think it's an important policy. Excellent.
A whole huge range of excellent points there from both Tim and Ethy so far. Excuse me, David, I'll get your perspectives on how we build some better AgTech companies going forward.
Well, certainly, the Israel models is excellent, and the patriotism to get behind one another is great. One of the things I'd like to see here in Australia is we're awash with funds in superannuation, and they just give big chunks to VC companies and trust that they'll be able to invest it in things. But really, I'd love to see the superannuation companies actually directly invest into some of our innovations that happen in this country. And I think there's a huge opportunity there for that. Rather than having it secondhand money through VCs, etc., I'd love to see it directly invested and get true return on investment for the actual people that will put their super into it. So I think that if I was to say that's the one biggest thing that I'd like to see to create, so there's no wastage, with administration, etc. This would be direct return on investment by doing it that way. And potentially, when companies like Neale, Tim's and our own, we could actually get really great support from our own groups here in Australia, much like it happens in Israel.
Excellent. Thanks for that, David. And to round us out, over to Ralph, and then we'll finalize everything up today.
Yeah, thank you. Yeah, so I think it is good to pay more attention to the environment. Innovation alone is not really, is sometimes struggling. Startups are struggling if the environment. We lost. Am I still?
We can hear you.
Okay.
All good, we've got you.
So, sorry about that. Yes, so I think providing the right environment and paying attention to that for startups to transition their or translate their innovation into market is very important. And for me personally, what I'm very interested in it is also that a bit more innovation goes into urban agriculture. I think especially in Asia, with 60% of the population living in an urban environment, I think it's a very interesting area that is not really explored enough yet.
Excellent, thanks, Ralph. So that's probably where we'll round things out today. We've had some really good conversations, and I think there's been some excellent perspectives on where we are now and where the opportunity lies in the future. From an investment perspective, we've all seen this area increase rapidly over the past couple of years. And I think the convergence of different technologies and different market forces provides an excellent opportunity for investors over the coming years. So with that, thank you very much to each of our panelists. And thank you very much for tuning in today.